All right, good morning, good afternoon, and good evening, ladies and gentlemen. Welcome back to the stream. Thank you for tuning in. Before I get started today, I'm going to go through this really fancy financial disclaimer up here, letting you all know that nothing on this channel is financial advice. The information on this channel is provided for education and informational purposes only, without any express or implied warranty of any kind. Please pause the stream, pause the video, and make sure you read through this. That way you know that this is not advice and it is simply for educational purposes only. Cool, we got that out of the way, and I can just close that out. Ladies and gentlemen, what is going on? Cracks, good to have you here. AEC, Jeremy, William, thank you all. Good to have you. Really excited to talk about what I got to talk about today. Because I think that as my channel continues and, I've started to make it through a lot of the content, I'm going to have to start revisiting certain topics here and there, and I kind of wanted to talk about edge. What is edge and what gives me edge specifically, or what do I feel like gives me edge in the market? You hear the same stuff over and over again about, I'm real disciplined because I wake up and I take ice baths in the morning and all this crazy. Yeah, my ice baths are not what's making me a profitable trader. I think that over time, the capability or the ability to identify problems and implement solutions over time has made me better. I think that certain things that I do within the day, the execution of the trade at certain areas of the chart has made me better. I think that being capable of identifying trade setups, reoccurring setups, and only trading those setups at certain times of the day has made me better because it's been more specific and I'm looking for very specific things. Now, if you're somebody out there who feels like maybe you're doing all of these things and you still just can't quite crack the code, like something's still just not adding up, you're not quite profitable, you're kind of on the line, hopefully the thing I'm about to talk about right now, which you can actually go to my video that I posted on Saturday, because I'm going to be very honest with you, I think that out of all of the videos that I posted on my channel, the one from this past Saturday, content wise, is by far the most important thing you're ever going to read or listen to on the internet, trading wise. Why do I say that? Because I feel that that video that I made, it was based off of my edge. That is what I feel like gives me edge in the market. It is the ability to not pattern recognition. It's not support and resistance or supply and demand or candlesticks or anything like that. It is understanding where I believe that there are human emotions being exploited in the chart. Like, for example, because I understand three push patterns, or because I understand certain concepts around three push patterns and market traps and stuff like that, that is what I feel like gives me edge. For example, looking at this chart right here and looking at the candlesticks, looking at it and going, okay, well, where do I think that people are becoming emotional? Well, there's certain concepts that we look at, certain concepts that I think about and talk about. Three pushes outside of consolidation. Man, what is going on? You got three pushes outside of consolidation. Look at this. Big candles. All right. This is the kind of behavior that I'm searching for. Lifting price, small candles, big candles, small candles, big candles, and then certain patterns and behaviors like this coming out of consolidation, pushing and three pushes. Now, I've just grabbed a random chart and I'm throwing it up there and talking about this. This is not a cherry-picked example. It just happened to be the chart that was up there. But, looking at this and going, man, where are people getting emotional? At the high of the day, around the previous day's high. Why? Because people are trading breakouts. People have breakout orders there. There's people doing X, Y, and Z in those areas. Look at the candles. How am I exploiting people's behaviors? Well, I understand that large candles in a chart, whether there's continuations of a move or whatever, those are the candles that are inducing or getting people to do something. And if you can understand where people are doing those behaviors, you can understand how to take advantage of them. Which means that if I understand that, me, just somebody who, was in the military and is not really that old and doesn't have really massive amounts of life experience, whatever it is, if I can figure that out, then all of those really smart people that have made these computer algorithms, or the banks or the institutions or whatever, they've definitely figured it out. All right. And that is how they're exploiting people day in and day out. Moving the market around and making money is just exploiting us as people. And I've had a lot of people come to me and ask me, well, do you think this is ever going to, stop working? What if everyone figures it out? I'm going to tell you right now, the hive mind of human beings is not ever going to change. Everybody's going to get emotional in the exact same places of the chart. People are going to think exactly the same from now until forever, unfortunately, because that is why 95% of people are failing, is because these programs and these things are making you get emotional at certain areas of the chart. The way they're moving the candles, the speed, the size, the way that they shape certain candles and then make them much larger in a different area to get you to focus in on that candle and focus in and focus in. It's all pre-scripted. From the moment the day begins, the little script starts running or whatever is happening, it all is just, it's like a pre-planned thing. Think about like entire weeks, all right? And my main topic today is mostly about the trapping behaviors and edge, but I want to talk a little bit about FOMC, right, in the news. Think about these weeks like non-farm payrolls, where there's an entire week of the market doing certain things. And then on that Friday, it just so happens that the news comes out a certain way so that it goes all the way back to where that move began. Yeah, I don't care what anybody says from now until forever. You're not going to change my mind that at the beginning of that week, the market did not start trading, and it did. You can't convince me that it didn't know what that news was going to be, and that those candles didn't print a certain way because it was anticipating that news so that the market can make as much money as possible. You'll never convince me. All of you could put 3,000 comments in the comment section telling me that I'm wrong and dislike my video 500 times. You're never going to convince me, because it's just, if it makes too much sense and it happens too much. I don't really believe in coincidences. All right. But that's enough of me rambling. That's really my discussion for today is, if you're out there and you're struggling right now and you're like, but I've been really good at identifying patterns and identifying trade setups and identifying, X, Y, and Z, maybe you need to add the human element into it. And not your own human element. How about you remove your human element and insert your past behaviors and understand where do you normally get emotional at certain areas of the chart, and then you get a bad trade or you fail. Think about that the next time you're about to take a trade and go, well, okay, where is other people stuck at right now? Are they stuck? Let the market prove to you that they're stuck and then take your trade. And I think that you'll hopefully see a better result coming into the future. Anyways, how's everybody doing out there? I'm going to stop rambling about this kind of stuff. I do find it very, very, very important to me. Like I said, it is my edge. And I really do hope that it helps all of you. So, once I discovered the human element, I suppose, I really did see a big, big change in my trading. How's everybody doing, though? See, from Bangladesh. Good to have you here. Awesome. Appreciate your input, Tony. Glad. Saturday's video is totally your best so far. Appreciate that. From Africa. Okay, cool. I was about to ask you how to pronounce that or where that is, but South Africa. Okay. Greetings. It's from Texas. Cool. Love Texas. Breakout. Awesome, Ackman. Okay, so now we've made it through period of instruction. No, I'd say more of a one-sided discussion where I kind of just said a bunch of words, and hopefully it reaches you and you don't just see some person up here like throwing words at a screen, yapping away. Hopefully the words land with at least a couple of you. But now we're going to get into the portion of the stream where I go through and I do the watch list for tomorrow. I'm going to be looking at, signal days. First off, my computer is lagging today. What is going on? I've got a pretty good, decent computer too. I don't know what's... Okay, so the three things, or the things that I mainly look at, they're the same thing every day, right? Signal days. I'm going to be looking at signal days. I'm going to be looking at the opening range. Now, normally I would be looking at the opening range on a Tuesday, and then coming into Wednesday, what's happened. However, you could still kind of gauge what the weekly template is doing coming into a Thursday. And normally I do these streams every Tuesday and Thursday at 5 p.m. And doing it today on Wednesday, we have an opportunity to plan for a different day. Tomorrow's Thursday. What do I look for on a Thursday specifically? So we can talk about that as well. So signal days, opening range, and then market. What's happened? I've closed everything out in one click. I don't even know what I did. It's impressive, really. Okay, wouldn't be a pips profit stream without having some kind of crazy malfunction. So, market structure, we'll get that up there, just so you can all, if you're taking notes. Now, those are the main requirements. Those are the things that I absolutely have to see in my analysis each day. And then there's some extra things. So if I have an inside day, I'm identifying inside bar trader stops. I'm going to mark off my breakout trader stops. Those are those areas of the chart where there's a previous day's level and they break out very clean and they just move away from that level. They'll be very obvious, I promise. And then price to level gaps. I'll put a little price to level gaps. That's basically where they've traded down or up and they've left space in between a level. Now, these are basically not the requirements, but if I notice them, I'm more than happy to put them up there because it is valid information that I need to see. Now, let's take a look at oil first, mainly just because it happens to be the thing that's left up there on my chart. Always doing my analysis on the 15. A little tip, though, if you do struggle to see market structure on the 15-minute chart and you're like, man, I can never see these major swings that he's talking about, it's not that hard. Just go over to the 1 hour, all right? And you'll very easily be able to see structure, looking at the highs and the lows that way. Now, I don't usually do that unless I'm really struggling to see it. So we'll take a look now. So very first thing that stands out to me, the 3 days of breakouts. 1, 2, 3. We've got 3 days breakouts. They've closed down low. Has there been a break in structure to the upside? We have a down. We have a down. So when they broke lower over here, my high's up here. Did they break structure up here? No, they did not. So all I can do right now is put up here 3 days breakouts. Because that obviously it's going down, right? I'd have to be blind as a bat to not see that it's 3 days breakouts to the downside, right? So we got 3 days of shorts in the market. Was there any other signal today? Inside day, first green day? No. Was there anything else? No. Okay, so now I can go and I can mark off my levels, my structural levels. I've got a low. They broke. They went lower, which means this is going to be my high right now. And they have now started to pull off of that low down yonder, which is going to make this my low. They pulled off in more than 2 candles, and that's why I'm marking that as my lows. It's also, the most obvious level. I'm going to throw my end-of-day consolidation up there. I'm going to mark it off right here. These are my levels, the top and the bottom. However, structure within structure is always good to look at the end of the day. So EODC, end-of-day consolidation. Remember, don't get sweaty over it. It's not, something that you have to, stress until you're crying and you're trying to figure out what in the world is that doing. It's fine. All right, just the most obvious points in the chart, just mark them off. Put a little line, put a little EODC in there. And then come to the chart tomorrow before your session and see, did it break out? Is it trending? Is it maybe a first red day and it's broken out, breakout, pullback, continuation, something like that. All right, that's what I use it for, but I'm not super overly worried about those levels. Okay, so from this, we've got structured labeled. We've got signal days labeled. The last thing on the list is going to be the opening range. What is the opening range doing? So in this case, I'm looking at the opening range and seeing and noticing, hey, this is a fairly wide range opening range. Now, we broke out, push 1. And we've got push 2 now coming in on this fine, lovely Wednesday. So I'm going to make sure I label this push 1, push 2. What am I looking for on a Thursday? If you ever listen to Stacey Burke, he talks about Thursday is day 2. Now, you'll never hear me refer to day 2 in a weekly template as day 2. I just refer to it as Monday, Tuesday, Wednesday, Thursday, Friday. So me specifically on a Thursday, one of the big ticket items to look for is trend trades. Trend trade. For example, we've been going down. We've got 3 days breakouts in the market. Is it really the best idea to look for a trend trade? Maybe, maybe not. But this Tuesdays and Thursdays are really ideal areas or days to look for 3 levels of rise or fall. For example, 3 levels of rise off the previous day's low. So like today's low, you can put the little 3 level, the numbered boxes up there. I got quiet and it felt weird. I'm sorry. Hold on. I'm just trying to get this thing to load. There we go. All right. So I can look at this and go, okay, well, where's the consolidation? If it were to move 3 levels up, it's oil, right? So I probably want a minimum of at least a 50 pip box. So what you can do is go into tomorrow, or I'll go into tomorrow, and I'll try to better identify the consolidation tomorrow and see, like, you know, what does it look like. But depending on where we're at in the chart and figuring out, well, how is it moving? Is it moving in 3 levels of 50? Is it moving, you know, and where's price at? Does it make sense for the... That's what I'm going to do. So, like, you could gauge it like this. If I come to the screen tomorrow and they're back up here, man, that's pretty far off the low. So I don't know, but that's supposed to be kind of the idea. All right. Anyways, this is what I call the ground level. Now, there are some times where the ground level doesn't seem to be used, and that's probably because I've just measured it wrong. However, I use this ground level, and I never saw this ground level thing taught anywhere. This was something that I, through my own testing and realization of, I just kept on screwing it up, and that's probably of my own fault, really. But what happened was it would go 3 levels, and then it would just go more. And I kept on trying to just get in at the level, and it kept on blowing through, and I was like, man, I need a better system. So what I started doing was identifying a consolidation. Like, for example, this one. Look, you can see very clearly that they're trading in a 50-pip box. So from this, I would go, okay, well, 3 levels of 50, 50, 50, and 50. And funny enough, that's exactly where it takes you, right? Back up to the high of the day, 3 levels of 50. In fact, I'll illustrate what I just did for you all. So 50 pips there. You can see very faint lines, but they do exist. They're there. And you can see the consolidation in that 50 pip box where they're just playing around. And then it goes up. And you can see the 3 levels of rise now from that. Boom, boom, and then, I'm sorry, this is just poorly drawn, but roundabouts, right? So 25 pip extension. That's the idea as well. Hey, 25 to 50 pips is the average stop hunt outside of the range. That's acceptable. So that's that's an exception or an expectation that they will go 25 to 50 pips outside the range. Really like that. That's okay. But once they start pulling back inside, this behavior of spiking into the high multiple times could have been a dead giveaway that, hey, 3 levels of rise, this could be a great trade setup. Anyways, I'm going to fix this because I like this. I'm going to put this back up over here because that's going to give me a potential strike zone for tomorrow. If it were to, maybe do that. We'll see. What in the world has happened here? I don't even know. It's fine. I'm just going to leave it. Close enough. Okay, so that's enough yapping. Let's put this up into pump and dump because that's all I can do on this. Oh, no, it's not. 3 days breakouts. All right, so, yes, today is 3 days of breakouts. However, there's no break-in structure. Now, if there was a break-in structure tomorrow and there was some kind of pattern, we were working the low of the day at 9:30, then yes, I would be okay with that. But I need structure to confirm to me that based off of that 3 days of breakouts that it's going to turn into a short squeeze setup. And if that doesn't happen, then maybe I need to let the rest of the template play out. However, on Tuesdays and Thursdays, typically going to be looking for trend trades. Okay. Alrighty then. I'm going to put this about like this. I'm going to take this trend line, which I don't really use, but is what it is. Put that through there just about like that. And also looking at this, kind of cool. I didn't really notice this earlier today, but the trend line, all right, there are multiple ways of gauging 3 pushes outside of consolidation. Trend line, look how they come out of the consolidation. Breakout, pullback, push 1, sideways, push 2, sideways, push 3, up, engulf, reversal, right? So trying to gauge 3 pushes outside of consolidation or 3 pushes outside of a trend line is also one of the common market traps that I look for. All right, I've just been yapping away. We got 85 in the chat right now, 36 likes. Ladies and gentlemen, the only time that I will fish this whole stream, I promise. Just do me a favor, hit the like button real quick. It's the thumbs up, or it says like. I have no idea, actually. But it really does help the stream. It really does help me. Honestly, it pushes my stream out much more. All right, there's something called like interactions or something like that, where they put it out to more people if people are interacting with my stream. So thank you all. I do appreciate it, and I'll stop yapping and I'll continue now. Man, someone's really going away at that like button. I appreciate it. Okay, let's go on to gold. And I'm going to zoom back out. We're going to click remove all this so I can start fresh for you all, and you can all see exactly what I am getting at. All right, so get rid of all this stuff because I can't see anything. Monday's range. We had an opening range. It was an inside day. They hit both sides of that inside bar on Tuesday. Cool. Good enough for me. And that's what's going on. That's why I feel weird. It's because I left something where it doesn't belong. I fixed it now. All right, so opening range on Monday. Close outside of the opening range today on Tuesday. Asia makes a lower low. London, New York pulls back, and now we've continued the trend, which is good. We have a major swing low down here. They have now broke that major swing low and gone lower over here. And that means, have they broke structure? So we got a low. This is going to be my major swing low right now. And if they break... Actually, they did. They did break right here. Okay, so this is my major swing low. And this is my major swing high. So now we're trading in between this box. And not a first green day. No 3 days of breakouts. Man, that is a really distinct pattern, though. Not a day zero. However, this sideways spike, pull back inside to the middle of the range. I'm definitely going to note that, because if the market sets up a certain way tomorrow, you better believe that I want to, just be aware of that pattern. Because if I come in and there's a bit of a, what would you call it? Like a parabolic trend trade pattern where they've peaked, and then there's a ascending support or descending resistance, whichever. I definitely want to very quickly be able to identify that. So I've got my end of day consolidation in there, EODC. And I think this is all I can do. I'm going to put this into pump and dump. I've got structure on there. We had this lower low down here, and then they did actually make a higher high before making a lower low, which could have just been an early indication for this reversal down here. But ideally or realistically, my major swings are already labeled. So this down here and that up there. In fact, if I were to go back to the 1 hour chart, maybe I'm wrong and I'm about to regret everything I just said, but low, high. Nope, everything's good. This is actually pretty accurate. Cool. I'm going to leave it just like that. 3-day shorts in the market on gold, question mark. Have I lost my marbles? Nope. All right, so we got 1, we got 2, and that's it. Loan trades. Is there a video of someone who just discovered your YouTube video? Wait, what? Is there a video of someone who just discovered YouTube and need a place to start? Hey, Ed, so on my YouTube channel, there's a playlist, and it says watch from the beginning for, I always forget the name of my own playlist, for effective learning. Watch from the beginning for effective learning, and I would definitely start at the very first video or the beginning of those videos. And make sure that you're downloading all the PDFs and putting them somewhat in order, because that will help you as well. Bias tomorrow, buy low. Man. Robert, I'm sorry, but I can't remember exactly what I should have looked over at the chat a bit more. I don't know, Robert, which pair you're talking about. Oh, wait, you said thank you, so I must have answered your question. All right, I'm going to move on. Euro JPY. Oh, immediately. Inside day. Previous chart. Okay. So for oil. No, Robert. So what I'll be looking for, trend trade, maybe a sell high to continue the trend. Now, it depends about where the chart is going to be at 9:30. If they're working the low at 9:30, I might get a session trade long. It depends. Lots could change between now and then, but based off of the information that I have right now, the only thing I can do is, come in tomorrow and see. Euro JPY, inside day. All right, inside day. Looking for is it going to break out and trend? Is it going to break out and reverse? If they break out of one side, there's stops at the other side of the inside day. Those are all the theses or the thesis that could come from trading this. Now, another thing that I'm noticing right off the bat is, hey, there is somebody throwing monopoly money into the air right now. They are traded this breakout. They were in significant profit. They think it's going to the moon. It's going to the stars, and they are still holding. Okay. So there are breakout trader stops still sitting down here because they have not been stopped out yet. All right. They're hopping up and down. They're going to be billionaires, bajillionaires. They're 52-week breakout turtle traders or whatever it is. I don't know. I'm being very sarcastic right now. I apologize. But it's the truth. That's where the stops are at, and that's where I'm looking. You know, they've left a bit of a space down here. They didn't quite come back down and stop them out. Maybe they will, maybe they won't. But it's an idea. All right, we got a low. We have a high. They went lower, which means that my high is now right there-ish on that pen. So there's been no break in structure just yet, but I do have my end-of-day consolidation looking like this. EODC. Anything else? Monday was actually at day 0, and this is a pretty good example of a day 0. Market going down. Multiple days of shorts in the market. Spike low, spike high, consolidation in the middle, sideways, vertical. Range expansion. Pretty good. Alrighty then. I think this is all I can do. I'm going to put this into inside day and looking at the opening range. We will see. That was like a big break in structure or something? Are we like at all-time highs? What's going on? We are. Not at all-time highs, I don't think, but we are up there. Is there anything that... Okay, so we're almost at all-time highs. We've got a little bit of space to get back up there, but we'll see. Not that that really plays any significant whatever in my decisions. However, today is the first day of a new month. So remember that previous month levels are in play right now. Japanese yen at a 30-year low or something. That's crazy. I think that didn't last year, wasn't there some crazy run on the Japanese yen? Like, didn't it go skyrocketing through the roof because the Bank of Japan wasn't going to do something? I don't remember. Recently introduced to your videos. I started to binge watch them all, but I am still struggling when you refer to market structure, making it hard for me to follow. Hey, Monica, so I actually have, it's the most viewed video on my channel, as well as another one with, I think, a girl like crying on the thumbnail. So I have 2 market structure videos for you, if you want to go review those. But market structure is definitely very, very important. There's just some specific rules or ways that I identify certain swings that is probably confusing you, but once you get that on lock, it will be a lot easier. All right, Euro JPY, US dollar Swiss. I threw this back on here the other day because one of my students from the webinar group had pointed out that there was 3 days of opening range breakouts in the market. And actually, they've now blown off on this Tuesday and gone into consolidation up here. So I've kept it on here because I think this is actually a fairly interesting pattern. And immediately, very first thing I'm noticing is very similar to the last pair. This breakout right here is untested, and therefore people are in profit. There's a profitable trade at that breakout level. People are monopoly money jumping up and down. Very excited. Okay, so from this, I can tell or look and see, all right, there was a high, and then it looks like right at the very end of the day, maybe they went higher. It kind of looks like they went higher, right? Yeah, they did. All right, so what I would do is I would draw a U and figure out where's my new low going to be, and my low is now right here. All right, so I'll just kind of review what I just said. This is where the high was formed. They pulled back in 2 candles. At a minimum. So I drew that line. I can't predict the future. I can't see what's going to happen to the right. All I can do is wait for that line to break. That's where it breaks. So I draw a U. And then wherever it broke, the lowest point is where you draw your low. Monica, to try and help you out a little there. Okay, so that's all fine and dandy. This is my structural bit. One of the main requirements, do we have any sort of signal day right now? Well, immediately I see 1, 2, 3 days of breakouts. We've got one push outside of the opening range. They did go a bit higher today, so I can count that as maybe a push. But at the very least right now on this pair, we do have 3 days of breakouts. Okay, and I can do that. Now, structurally, there's no reason to go short. Got it. But that could change. And when I come to the screen tomorrow, I will know. Put this up in 3 days. Breakouts. Opening range down here. We've gone higher. Obviously, push one. Breakout trader stops. Everything's labeled. Everything's good. I'm going to move on. Which indicator do you... Oh, man, I think the everyone just left the stream because probably the ads got you all, and I apologize for that. I meant to stop them. Which indicator do you use for daily separations? Hey, so this is all my pips to profit indicator. Okay. You can use lots of different variations, but pips to profit, if you go to Discord and click on the indicators tab on Discord, and you go to, it should be the very first message in there, P2P, click on the link, scroll down, add it to favorites, then add it to your chart. I've left instructions for you to get it. It's very easy. And it's free. Joining the Discord's free. All that's free. So if you're worried about that, don't be. Okay, US dollar, Japanese yen. Inside day. As of right meow. It is an inside day. Man, I thought we were behind schedule, but we're cruising right now. I'm good. All right, inside day, and I have also this breakout level down yonder. Again, very similar to those other pairs. Very solid breakout where they did not retest at all. And I won't make the same joke a third time because everyone's probably cringing super hard every time I make it. But also very important information is that on Monday there was a failed breakout. Okay, so we broke out on Monday, project this line across, breakout failed on the following day, day 1, day 2, 3-day cycle. Day 3, 3-day cycle turns into an inside day. Can't do that. So tomorrow's day 3. Looking for trap volume, looking for basically Monday, Tuesday, Wednesday, and now Thursday to create a box. And the box is going to look something like this. And I'm going to be looking and seeing, well, you know, is this box going to be a failed breakout or is it going to be a range expansion? That's about it. Or are we going to trade completely on the inside? However, I do know that I want to be trading from the outsides of my box. All right, market structure or structurally, we have a high, a low, then they've gone lower right here at the very end of the day, which means that I can draw, they pulled back in 2 candles, so I can draw my low. Now, they have not gone any lower, but there was this low, then they pulled back. So if I were to draw my U, and then where they went lower, I can then draw my high up here. Now, that is structure, but it's also going to be my end-of-day consolidation. So EODC. And any other signal days? No. Something that I am noticing, though, is push, then a stair step, and then a push, and then a stair step, and maybe a push. So this kind of looks like 1, 2, 3 down. I'm just going to leave those lines there. They don't mean anything to me, but they could become relevant, letting me know that this is 3 pushes. In fact, I'm going to do this a little bit more methodically instead of just lines chucked up there on the screen. So I'll do it like this. And then notice how intelligent the market is. It just kind of straddles but doesn't break. And then it finally builds up enough liquidity that it breaks. And then down it goes. Okay, all planned. Over and over and over again. Does the same thing. Man, that's going to bother me. That's not straight. It's okay. I'm going to leave it just like that. I'm going to put this up into inside day. I think that we finally broke out of October 3rd, right? Finally. Yeah, so October 3rd, they broke out over here. Break of structure. It looks like maybe a 3-push pullback. Now it's blown off very strong through that high. But I am happy to see that we have stopped just trading inside of this range from October 3rd, because that was a very obvious manipulation or consolidation that I didn't want to be a part of. Basically 300 pips of market maker playground that I didn't want to participate in. But now that pair is fair game again, and I can look at it. All right, looking at US 30, we have the opening range on Monday. And on Tuesday, breakouts. And then today, you know, they've gone higher. Cool. What I'm going to do is, was there a signal day on this Wednesday? We've got 1 day, 2 day, 3 days of breakouts actually within this week itself, which is even better. I like to see that. And I'm even going to put it in parentheses because I noticed it, because I said it out loud. I like to see that. Just know that, hey, I've got 3 days of breakouts within this week itself. 1, 2, 3. Structurally, what happened today, we have a high. They went higher. That creates this as my low down here. And then this is going to be my high up here. And that's also going to be my end of day consolidation. About like that. Alrighty then. Where's the last place they broke structure to the downside? I think it was right there. And then they actually broke back up and went higher. So that means that this is going to be my major swing level down here. And if I were to go to the 1 hour chart, hopefully I don't have to eat my words, but that's probably, yep, okay, so that is accurate. Based off the 1 hour chart, you can even see it. High, low, higher high, and then they actually broke lower on the 1 hour right there as well. But those levels are still accurate, so I'm going to leave it just like that. Cool beans. Let's put this up here. Would your strike zone be at previous day's high? Depends on the consolidation and the numbered boxes. So make sure you're paying attention. Like I said, those numbered boxes really are going to help you a lot. What will be minimum risk ratio? My minimum. Wait, what? Sometimes I only risk 0.25%. Joseph, good to have you here. Happy to see you again as well. Would you not consider this as a first red day? Which, I think we were talking about this one. Maybe. No. Yes, but no. I don't really know. Loan, I don't think so. I would have liked it if it like traded up and then traded back down and closed like somewhere up here maybe, but that's really not what I'm looking for in a first red day. Swiss franc. That does fit the bill, and that does fit the pattern. A day that's opened, attempted to trade higher, and then is traded down. Yeah, I'm going to throw that in there. Good catch. Maybe I need to open my eyes a bit. Good stuff. All right, I'm going to actually move that because I do like that now that you've pointed it out. I would say that I would have liked to have seen a break in structure to the downside, ideally, but maybe that'll come tomorrow. Usually, like on the day that I get a first red day, I really do like to see that break in structure on that day itself. It makes it a little bit more probable in my mind. However, this does fit the pattern pretty well, so I am going to leave that there with what you said. So good stuff. Oh, okay. So now this, on the other hand, has also not broken structure because we had a high and then it traded down and it got down real low and then it broke the high, which actually confirmed this as the low down here. And then this is going to be the high. About like that. That's my box. But this is a day that is opened, traded up through the high, and then closed. And remember, first red day is not a singular thing. It is not, hey, it's opened, traded up, and then closed. It has to be A plus B equals C. So without A, you cannot have C. Okay, so if I were to like make first red day into a math equation, because I know that everyone understands things differently, A, and then this would be like B, and then this would be like C, and I am not a mathematician by any means, and I didn't even go to college or anything like that, so please don't jump down my throat. But A plus B equals C, I'm talking about A, you have to have this pumping day, and in combination with the behavior to have a first red day. So like C would equal first red day, or like a trade based off first red day. All right, so this is first red day behavior. Giant pump, day that's opened, attempted to trade higher, and then closed below the opening price for that day. I would consider that a first red day. Now, it could go straight up tomorrow. So be it. But it's the behavior, and it's, that is what I'm kind of looking for. So I'm good. I'm labeling it. Okay, we got a break of structure over here. They did go higher right there. I already said that. Cool. Got it labeled. Everything's good. What else? Opening range. Oh, this was actually an inside day as well, and they've triggered the high of that inside bar first, but they hit the low as well, so I think that they probably hit stops on both sides. All right, I'm going to put this into first red day, and I think that's all I can do for this one. How's everybody doing? As I'm going through this, if you all want to type some questions in there, throw some questions in there. I'm always looking left to make sure you all are taken care of the best that I can. And I do appreciate the, people interacting because it makes it a lot more enjoyable for me as well. Which is a big reason why I even do these live streams is to interact. I enjoy, talking with you all. And also that, Cracks, I appreciate that. Yeah, also hit the like button. But I said I wouldn't fish, so I will not fish. All right, S&P 500. 3 days along, similar to US 30. Breakouts, breakouts, breakouts. Should put it on a t-shirt. 3 days, previous day's high in the market. Very obvious to me. This breakout right here has not been retested. So I'm going to make sure to annotate that. And it might play out, maybe not. But there is this higher high right here, which is created. And then they pulled back in 2 candles, which means I can draw that line confidently. And because there was a high and a pullback and a higher high, I can draw my low. So this is not only my actual structure that I'm looking at right now, even though it's just minor structure, but it is structured nonetheless. And I've got 3 days breakouts. This is going to be my end of day consolidation. So I do have at least one signal day. No first red day. Not an inside day. We got push 1, push 2 outside of the opening range. Previous week's high. Where's that? Up here? Man, I got quiet again. That was weird. I don't like when I do that. New month. So some monthly. Yeah. I agree, Fuber. Just curious, would you concept also work with alter bonds? I don't know. Like, I have no idea. I've only ever traded for, so a lot of people ask me that as well. Like, does this work with stocks? Does this work with, if it's got a high, it's got a low, and there's emotion in the trading behind it, then I would argue that yes, it will work. However, I stopped trading like crypto and I stopped trading like stocks and stuff because I'm a price action trader, and when the candlesticks look like dashes, explain to me the price action behind that. Does 2 dashes equal a hole? I don't know. So a few weeks ago, closing price. A few weeks ago, and how important is this, Joseph? So the closing price, how I've always talked about time engulfments. I think this was like very early on in my channel. I started talking about time engulfments and stuff, and understanding the difference between the open and the close. So at the close, there's people buying and selling, which means that if the next day opens a certain way, there could be volume trapped. And if the volume, the day opens, think about time engulfments, right? A 15-minute bar opens, trades down in 3 pushes, and then engulfs the opening time for that 15-minute bar. Well, maybe they just left all the volume trapped down low. Same stuff. All right, it's all the same stuff. Remember, I keep saying this. All the concepts that I teach, all the concepts that are out there in existence are fractal. So all the stuff that I'm saying about, 15-minute bar opens, 1 hour bar opens, looking for traders trapped at the close of 1 hour and 15-minute strong close bars, or even 1 minute bars, that could all be applied to every time frame. Okay. ETS, Forex, most liquid thing. Yeah, exactly. More easy. I think they're easier to read. That's some crazy English spell. Did I say something crazy? I wouldn't be surprised. I'm from the South. Things just flow out of my mouth sometimes. All right. This is all I can do, and I've been rambling again, so I apologize. Gonna throw that up there. Not you, the question. Oh, okay. Look at the Nasdaq. Very similar story. 3 days of breakouts, blown off. Same price structure, same everything. Also, these peaks back here. I'm wondering, is this gonna be a range expansion? Are they reaching for something? You know, I don't know. So we're at like a little over 2 full expansions of the range right now. They might be reaching for something. I don't know. But I'm not going to waste any time. I'm just going to put this in the 3 days breakouts. It's all the same stuff. And even the exposed breakout level is there as well. I'm just going to move on from that. Euro pound. We got a Friday inside day. They've hit the stops. Okay, so Friday was an inside day. They went up. They've hit the stops now down here. Actually, kind of an interesting price note or price behavior in general. The fact that this was an inside day, right? And they left. This is what I'm talking about, price to level gaps. So like this was an inside day. This is where the stops are. And then they left this little space right here. And then see how they pulled off of that area and they just hung out there. Made the market look like it's going to go long. Made it look like it's going to go long. Made it look like it's going to go long. People are putting the stops down here. Made it look like it's going to go long. People are putting the stops down here. Making it look like it's going to go long. People are putting their stops down here. And then it just rips to the downside and just takes all those people out. So, again, coming back to the very beginning of the discussion for the stream about market behaviors and trying to figure out what they're trying to accomplish and, you know, not knowing what you don't know. But once you do know, it's really important to look for these things, and this is one of those things, or one of those areas of the chart that you can look for this behavior. All right. Bloop, bloop, bloop. Okay, was there a signal day today? This is where the day opened. It is not a first green day. We don't have 3 days of breakouts in the market. Something that is relevant and important to me is the fact that this was sideways. They manipulated this box. Look at what they've done. All right, this was a just trap, hit the high, hit the low, pull back inside, and now, you know, it's done what it's doing. So what I'm going to do is I'm just going to mark this off as something like this, where they peaked up and they peaked down, because this, remember, again, concepts are fractal. Just because it didn't happen over the course of 2 to 3 days and it's just happened within a session, maybe it could turn into a multi-session setup. All right, so we've got this, that. There was a lower low. So we had this low down here. Then they went lower. So I think that might... Okay, so we had a low. Man, why am I struggling with this all of a sudden? Okay. Pull back, candles. We're going to do it like this. Okay, so that would be my high, or would have been my high right there. Okay, now they broke. Sorry, I just needed to work that out in my own head for a second. Sometimes you just get stuck. So there was a... If you draw the U, right, they went lower. Now I've got to break in structure to the upside. There we go. Okay, and that's going to give me my end-of-day consolidation as well. I'm going to use that as the high. They pulled back 2 candles. Can't predict the future to the right. All I can do is see that they pulled back, and that's where I should be drawing my line. And I'm going to draw my low right there. I kind of like this, the way that they've consolidated and manipulated both sides, and it looks like it's prepped for something. Not to say that it is for sure. I have no idea. However, it does look nice. I really like this pair, by the way. Euro pound, and I'm sure someone's going to give me some crazy financial explanation for why it's moving the way it is, and that's fine. I don't ever look at that stuff. I just noticed that this pair, for whatever reason, seems to be very nice for what it is. It just seems to always have nice, fluent movements. And not a lot of wicks, right? It's not super crazy with the wicks. Okay, so no signal day. I've got my structure marked. Opening range. We've got 2 pushes out. I'm actually going to label that. All right, push 1, Tuesday. This is push 2. And if you've ever heard me talk about 3 pushes outside the opening range, you know that a lot of times Wednesday will pin down. And then they'll trade through it, trap volume underneath, and keep going. Or reverse. So there is a bit of a pin here on this Wednesday, which makes me question everything. So I'm going to leave it just like this. I'm going to put this into squeeze because I do believe that this is a squeezing pattern. We've got multiple days of dump. Dump, push 1. Dump, push 2. Maybe dump, push 3. We'll see. We will see. All right, pound dollar. We have almost neared the end of this list. Okay. Ooh. All right. I'm going to leave this right here. I'm going to quiz you all. Be ready. I want to see somebody get it. All right. See if I've done my job well or if I'm just a completely trash teacher. Okay. Monday, Tuesday. The combination of the two between Monday and Tuesday, just looking at the weekly template, what kind of signal day is Monday, Tuesday? What kind of signal day? If I were to do a math equation, A plus B equals C, Monday plus Tuesday equals... Whew, thank you, Dave. I can say that I've at least taught one person, and I'm not completely, totally garbage. Dave with the... Oh, spells. Good. Good, good, good. Spells, parabolic, loan trades. You're pretty close. All right. All right, so if you didn't get the answer correct, no big deal. Go back and watch my... or you don't even have to really watch. If you just tired of hearing my voice, whatever. Go and find my tips and tricks slide for the weekly templates. One of those weekly template tips and tricks that I've left on that slide is Monday, failed breakout at the low of the week. Tuesday, failed breakout at the high of the week. Closing back in on the inside. And then looking at Wednesday as a potential for a parabolic move in a direction. Now, did it play out today? Arguably, you know, a bit of a high, low, higher high, lower low, consolidation in the middle. You can see the bit of the channel and it exploded down. Was there follow through? No. So that argument, you know, is what it is. But the patterns there does exist, and that's what I would have been or should have been looking for today on this pair. Now, looking at it, though, since this is decided to do just absolutely whatever, I'm going to put this as previous session high and low. And admittedly, I'm going to do it slightly different this time because of what has happened here. I'm just going to mark my high and my low exactly where I have it because of now we have a bit of a pattern within a pattern. Spike, 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 and spike. Has there been any break in structure to the upside? High, low, higher high, lower low. Made a lower low again. So let's draw my U and figure out where my new high is going to be. Boom. So high of London was pretty much the high for today. Did they break that? No, they did not. So I'm going to leave that just like this. And I'm going to leave my box just like that. Do I have any signal day today? I am not putting that as a first green day. I'm sorry. I mean, it might very well go up tomorrow. I have no idea, but I'm not willing to. Remember, A plus B equals C. So was there a significant enough dump for me to say that this is a first green day? Not really. I think all I can do with this probably is just put it into squeeze again with this other pound pair based off the pattern. Mini day zero. Yep. Fed news today. Yep. Really screwed some stuff up. Cool. All right. Love to see it. Euro USD. All right. We came down today. It looks like we hit the previous week's low. I had that annotated. And also I had this up here like this. Trying to figure out where the money is. The money was under all these levels. They came down. They got it. This might have been the first mouse, really. Day one, 3-day cycle. Today was looking for trend trades. First red day, downwards direction. I don't think I really even looked at this pair today, if I'm being completely honest. I traded oil today. If you all were in the live stream on Discord, it was a fake short, all right? Because we had FOMC today, I don't trade on FOMC days. Those are my rules. I do not trade the New York session on an FOMC day. But I told everybody that I would do a live stream where I actually trade, and I did. And I took a demo account short today. Can you explain trap volume and an example on charts? Uncle, yes, I will absolutely do that, but please, please, please go watch my video from Saturday. Anybody who's ever been like, oh gosh, trap volume, what is that? Just watch my video from Saturday, right? The ideology, the methodology, the whole entire concept, it will make more sense. Trying to figure out where people are trapped, trap volume, all that stuff. Do you trade pound? No, I do not. I mean, it might move nice. I'm not discounting what you're saying, but these are the only pairs that I trade over here. All right, Euro USD. I'm going to finish this one up, and then Uncle, I will make sure to answer your question here. Okay, and I've got about 4 minutes left, so I hear my fiance moving around out there. I got to make sure I go help her. All right, so there was 3 days breakouts and a failed breakout, and now we've gone lower. We had a failed breakout at the high of the week. Now we've had a failed breakout down at the low of the week. That's something. All right, see, this is where the wheels start turning. I start to develop an idea of some kind. Because that is very relevant information. Because we had a day one, now we have a day one. Tomorrow's going to be day two. Are we looking for higher highs and higher lows? I have no idea, but I can mark off my levels right now, and then when I come to the screen tomorrow, I'll be able to look and see. I've got my... I probably should like put the line where it belongs. At the low of the New York session, and then I think that the high is probably the high of London, but I'm just going to do end-of-day consolidation about like that, and then I'll be able to see how it develops a bit more tomorrow. I like this, though. This looks like, you know, I've got an idea, at least, of what could happen tomorrow based off this pattern, and I'd be willing to, you know, maybe this is the first mouse. They're stop hunting down into those people. Push 1, 2, maybe 3. I don't know. But I think this is all I can really do. There's no signal day. There's no much of anything. So I'm going to put this into squeeze with some of these other euro and pound pairs. And I think I'm just going to leave. This is a good watch list. I'm happy with this because there was a lot of things that look like they're maybe setting up and they could maybe provide something tomorrow. Nothing that I'm jumping out of my chair about and throwing my mouse across the room. You know, that's it. You know, referencing Charlie Brown. Nothing like that, but there are definitely some things that look like based off, you know, the Fed was a catalyst. It moved the market around today. It maybe might be a decent Thursday and a decent Friday tomorrow. Okay, Uncle, I'm going to tell you, I'm just going to throw a few things out there, all right? How do I see trap volume? Well, there's certain areas of the chart where you look for it. Above and below previous day's levels, I automatically think, is there going to be volume trapped above or below those levels? I look at it from previous days as well. So like breakouts of previous days, you can drag across and be like, okay, well, you know, is there going to be trap volume? Look, there might be volume trapped up above there as well, but overall, they may have just got all of these people. Okay, and that's fine. That's great to look at it in hindsight and be like, oh yes, aha, trapped volume. But what I do is I use the candles. Look at this. Does that look like a candle that you would want to buy? I would argue and say yes. Does that look like a candle you would want to buy? I would argue and say yes. Did that candle break a high as well? Yes. So that's a candle that I would believe, hey, people are buying that candle. Okay. Then we come over here and I look at the extremes. They come out of consolidation. Look at the candles. They get really small. And then it gets really big. And that just seems to be a candle where people are probably buying that candle. People are definitely buying that candle. Now, that candle is a capitulation or a climax blow-off candle in a direction at the worst possible place of the chart. And when you watch my video about market traps from Saturday, you're going to hear me say this over and over again. The first candle out of consolidation or the first push is the one that gets your attention. The second one is the one that makes you take action. The third is the one that makes you take action at the worst possible place of the chart. That's the behavior. That's how I'm figuring out where people are stuck. And if you understand that people traded this breakout, for example, or they bought the close of certain candles. They bought the close of certain candles. And they bought the close of certain candles. And once they lock it in, as you might have heard, lock it in or whatever you want to call it. I could care less what you call it. You could call it the Kodiak bear pattern or Tyrannosaurus Rex pattern. I don't know. I'm just making stuff up at this point. But if whatever you'd like to call it, I know that people were buying the close of certain candles. And when I see behavior like this, I wait for the market to prove it to me. So, like, are they going to go back up and let those people out? That's the question in my own head. Because I can now say with confidence, hey, maybe these people are stuck, and I just wait for the market to prove that to me. We don't know wintertime. Hey, so I think I Googled it. It was in the Marine Corps for 8 years. I should definitely know when daylight savings time is. But it's the first Sunday of November, so it'll be the 5th. Yeah, it'll be the 5th. Guido. Euro USD. All right. Uncle, no worries. You're good. Hopefully between this explanation that I just gave you and, the one that you're going to hopefully get from watching that video, it'll clear some things up or at least give you something to look for into the future. But ladies and gentlemen, I think I'm going to call it here. I'm 1 minute over. Time management. Gotta get to it. Cook some dinner. Eat some dinner. You all have been fantastic. Thank you so much for participating and making my job enjoyable, sitting here talking to you all and, just spouting some knowledge if I can. Ladies and gentlemen, I hope you've enjoyed this stream. If you have, before you go, do me a huge favor. Hit that like button. If you're not subscribed, maybe you're new here, hit the subscribe button. I do this every Tuesday, every Thursday at 5 p.m. Eastern Time. And I put out a long-form content video every Saturday at 7 a.m. Also, there's the Discord channel down in the description below. Lots of very great information over there, free information, lots of resources. And of course, if you do want to participate in the weekly webinar, that information there is there as well. Ladies and gentlemen, you have a wonderful rest of your evening. I will see you all in the next one. Good.